All right, so we began the show talking about government bond market, which is known as the risk-free market, right? I mean, the government always pays its bills. That's great, but if a bank can hold it to maturity, right? But what if a bank has to actually sell those bonds, like Silicon Valley Bank had to, and then we found out they were worth a whole lot less? I want to bring in Walser Wealth Management President Rebecca Walser. So, Rebecca, right now, the average U.S. bond, to take treasuries, corporates, mortgages, they're trading at 86 cents on a dollar.
Right.
Like, okay, if you hold them to maturity, fine, but you can't always do that.
Right.
And the question is, how did we get here? How did the risk-free investment become the most dangerous thing out there?
Well, the answer is that what happened was the Fed raised rates very aggressively. And obviously, Charles, you know that there's an inverse relationship with the bond value and the interest rate. So if you buy a bond of $100 and the rate is 3% and next year the rates are 6%, your fair market value of your $100 bond is going to get discounted to make the yield effective 6%. So whenever rates are rising, existing bonds always decline in value.
And so they just were people were just too comfortable with this. I mean, are we just blaming this only on the Fed?
No, I'm seriously concerned about the banking issue because
right.
what traditional banks do is they take deposits and they make loans, real estate loans, commercial real estate loans for regional banks. But what has happened is we've gone to treasuries. Banks have diversified their risk by buying treasuries and instead of making loans
right.
so that they could shield
right.
the risk. And with these treasuries going down so much in value, we've lost about $2 trillion of value in the banking system on the treasuries that our banks hold.
It's so funny you say that because Silicon Valley Bank had one of the lowest loans portfolios out there. They weren't lending any money out. They just, like to your point, they just bought treasuries with it.
That's the whole problem. Banks lend on the long term and borrow on the short term. So when your short term is losing money, we have a massive banking problem in that.
Speaking of massive problems, bankruptcies are erupting higher. Corporate defaults are climbing. And beyond that, you know, I look at what's happening in politics. President Biden's numbers are completely underwater, and you zero in on the main reason, and it's financial. Everyone's worried.
The economy. It's the economy.
The economy. So, I mean, here's the thing. You were one of the first to talk about this. Even late last year, you kept saying something big is happening.
Yes.
Is this the beginning of it?
This is the end, Charles, in my opinion, of the chickens coming home to roost of 20 years of really cheap, easy money since the dot-com crash, since Too Big to Fail and the global financial crisis, GFC, and now coronavirus. It's all of it coming home. We've just printed as that's the solution, and there has got to be a reckoning. And with the banking crisis that we're starting to see with what I'm talking about,
right.
This is the reckoning, I believe.
So, you know, listen, people come to you to help them with their money. Is there anything you can invest in?
I mean, I am using the term right now, what's a bridge asset? If our system does experience some kind of situational transition, bridge assets would be precious metals, things that will take us from one system to another. So I would say if you're really concerned.
So Bob Menendez sold at the wrong time. If he listened to you, he wouldn't be in trouble right now. He'd be holding on to the gold bars.
Yeah, he would have the gold bars, not in the drywall. Yeah, exactly. So, I mean, if you're really concerned, obviously precious metals are true currency and not manipulated by governments.
Is there anything on the equity side you can do?
I mean, there's a lot of equity value, but you have to look because there's not a lot of capital financing right now. And so companies are going to have a really hard time continuing the growth when there's not a lot of capital. The
bottom line, though, is this malaise is just getting started, though.
It's just started. Just like your previous guest just said, Charles, we always knew the stimulus was going to take us into the 9th month. And now with the $5 billion starting next month, the student loan repayments and and all of the savings kind of drying up, that's it.
All right. All right, Rebecca.
It's depressing. I'm sorry.
That's why you're invited to all the parties. Thanks a lot. Really appreciate it.